Morning, good afternoon, good evening. You're watching me, Nikki, also known as Facelesstrader, for our global market daily updates here on Awesome 10X channel. If this is your first time, please don't forget to like the subscribe button and click the bell for our notifications. Our live stream is always daily, 1 p.m. Philippine time and 1:30 p.m. for global market updates. So let's begin. The breaking news, of course, is Zoom Video. Zoom Video earnings and sales blow away expectations. The stock rises towards more records. Sales grew by 169%. This is, of course, higher than expectation. More so, they had a very, very strong guidance outlook upgrade. Let us read. Okay, so revenues improved 169% to $328 million from $122 million a year ago. The market was just expecting 230, so this is a clear beat. The COVID-19 has driven higher demand for distributed face-to-face interactions and collaboration using Zoom. The use cases have grown rapidly as Zoom was integrated into work, learning, and personal lives. Underscoring the growth, in fact, the Zoom meeting had been attended by more than 3,000 people, even with analysts late Tuesday. Video is going to change everything about communication. We have a lot of opportunities ahead of us. The total addressable market is bigger than we expected before. So right now, Zoom Video is actually trying to upgrade their revenues from about 900 million in the full year to about 1.78 to a 1.8 billion dollars for this year alone. Take note that Zoom Video today trades at about $200, and that would be 60 billion market cap. 60 billion divided by 2 billion is 30 times price to sales, which is actually cheap, considered cheap for a company growing at that pace of 169. So we'll discuss the charts, but definitely from a fundamental sense, a lot of the fundamentalists would continue to buy and hold their Zoom Video after this earnings report. Let's read. So shares of the video conferencing platform had a record usage of 300 million daily meeting participants as of late April. So these were, we'll have to take a look more on the numbers. Let's go to the news first, and then we'll go deep dive in the charts later. Now, another report that we saw was BZUN. BZUN earnings were mixed, but they expect their business to accelerate. For those who don't know, BZUN is also known as the Chinese e-commerce Shopify. So, of course, everyone likes Shopify because Shopify went from $18 to $800, 40 times in 5 years. Now, BZUN company IPO $10. So far, it's trading at $32, still 3 times from its IPO. The market, so this company climbed revenues 18%. They believe that revenues would rise 20 to 30% in the next few quarters. Gross merchandise value is now $1.3 billion. They expect growth of at least 25% the next few quarters. Since March, China's e-commerce has begun steadily recovering while the logistics industry has normalized. While we incurred incremental costs associated with the pandemic, we were able to reinforce our leading position in the market. Alibaba is a partner in BZUN, same as for JD.com, same as for your Starbucks. So let's take a look at a few snapshots in their earnings call. Let's read it together. While COVID-19 impacted overall consumption and growth of e-commerce during the quarter, we mitigated this. For the first quarter, both GMV and revenues grew by 18%, exceeding our expectations. We added many exciting brands, including European home furnishing retailer, a few luxury brands, as well as domestic brands in the FMCG category. Meanwhile, we deploy our high-quality growth strategy, optimizing our category mix, ramping up new brands, continuously improving our blended take rate for the quarter. In contrast to the wide e-commerce industry, they suffered from a serious logistics disruption. We maintained our logistics operations, ensuring business continuity to our brand partners, sustaining their e-commerce strategies during the COVID pandemic. The ability to offer uninterrupted services during the most challenging environment has been immensely appreciated by our brand partners. As a result, brand partner supply chains from their traditional logistics partner has really gone to BZUN. Now, as a digital strategy enabler, we only not ensure that the brand partners are able to merchandise and fulfill orders. We critically support them in navigating this challenging environment and driving their growth opportunity. We enhance and revamp our e-commerce, generating high-quality leads and demand for brand partners. Example, we continued and strengthened initiatives, expanding consumers' touch points, and leading short video social platforms such as Douyin and Kuaishou, while consumers are staying at home. Let me share to you an example. In early March, before any recovery in e-commerce traffic, we hope our leading international food and beverage chain by organizing its marketing campaign built around the so-called Cherry Blossom Festival. We organize campaigns allowing people to express their wishes, building their digital customer relationships. We help this brand partner generate over 500,000 viewers, and it's also the top ranked by Alibaba's most successful live streaming efforts over that time period. As you could see, BZUN and Alibaba are helping each other in this COVID pandemic. And you could see that after the earnings report, BZUN went up 10%. We'll take a look in the charts whether we can continue to buy and study and analyze this for a deeper dive in the next few sessions or in our classes. So the beautiful thing is that the priority is digital go-to-market and expansion strategy. And you can see that BZUN is a COVID-proof play. BZUN, this is from Motley Fool by Mr. Leo Sun. Just to read to you, in a previous highlight, revenues were growing 35% last year to $1 billion. They were actually just expecting 9 to 13% growth, but they're now doing 18% with an increase of 25% in the next few quarters. So this is a growth company, and the forward PE is somewhere at about 20 times multiple. Take note, BZUN helps Starbucks set up shop in China. And the Chinese e-commerce market is estimated to grow somewhere from about $2.4 trillion to about $4 trillion in the next 3 years. So if you want the secular growth, BZUN is a company that you want to also be aware of. So Zoom and BZUN are both companies that are premium. So one is premium price. This is still relatively reasonable price. So you want to take into consideration about these things. Another news, of course, Zuora is going to have a new CFO. Let's talk about Todd McElhatton. This is a CFO dive. So Todd McElhatton came from, of course, SAP, Oracle, and VMware. He's now joining Zuora and is happy to be part of the future, which is the subscription economy. Of course, Zuora is helping businesses similar to Zendesk, DocuSign, Zoom Video, HBO, Financial Times, Wall Street Journal, for their subscription billings. They're focused on accelerating growth, and with the CFO's background in cloud, I think that they will offer more financial predictability as they help their own clients, which are more than 1,000 today, to become more subscription economy ready as well as cloud ready. So in one of the questions, how are Zuora's services vital during the pandemic? Let me read to you. They said, subscription-based business models are the key to coming out on the other side of a post-crisis economy. Zuora is reporting half of their companies not having any impact with their subscription rates, and less than 20% are actually growing with an accelerated pace. Amid the current COVID climate, Zuora is perfectly positioned for a customer base seeking recurring revenue growth with an authentic engagement with their customers. They're also helping customers launch free trials, credit memos, option to suspend or resume subscriptions. Over the next decade, every company transforms themselves into subscription business, and the leading organizations are SAP, Oracle, and VMware. I have been seeing how cloud-first strategies backed up with the power of recurring revenue can grow power in scale. And I'm thrilled to see Zuora's mission transforming every company into a subscription business. Now, this is also news for you. US IPO market has been down 60% due to COVID, and this will be the first IPO for the year. Warner Music Group, of course, Warner Music Group's one of the most well-known in their artists is Ed Sheeran. They own artists like Ed Sheeran, Bruno Mars, Cardi B, 21 Pilots, Lizzo, Katy Perry in its filing. Now, Warner Music has been hitting a profit of about $258 million on a revenue of $4 billion. Warner Music, of course, licenses some of their brands, some of their records to Spotify. Now, after going public, Warner Music is now, so it's gonna go public. I'm not really so bullish on these. I would rather have Spotify. Spotify is a better company in platforms wise, I think. But we'll see. Depends on how the market goes, and the IPO market will actually be a barometer for the risk sentiment on some record music industries. Now, of course, there's a continued violence and a lot of unrest in USA. We've seen gun stocks rally, continuing the surge in background checks, street violence stoking the demand. Sturm and Ruger shares soared to the highest level before Trump was elected. Smith & Wesson stock powers towards 19-month high. This is the last slide before we dive into the charts. Adventures in Financial Independence took the original work from N. Nambu. As you could see, this is not yet updated because here Zoom Video is trading at about 80 times multiple. But with that 169% revenue growth and almost 100% sales revenue increase, Zoom is now trading somewhere here in your 40 times zone, which might make it seem still cheap from a perspective on the SaaS community. Take a look that BZUN and Zuora are, of course, very cheap, and that's why those earnings can be reevaluated. Zuora will report their earnings this Thursday, as well as Work. So Work might be, if they're growing more than, we'll never know, the results are Thursday, but if they grow somewhere from about 80% to more than 100%, we could continue seeing growth. So let's discuss these names and their charts. Okay, let's go to the charts today of the companies that I discussed. So from a valuation perspective, even if Zoom Video has rallied more than 300% from its lows, we continue to see that the bullishness is warranted if you are judging it from the company's fundamentals. So how high can this go? Let's use our technicals. Okay, so technicals wise, you have to consider that Zoom is already going from euphoria to insanity zone. When we say insanity zone, we can go somewhere from about 2618 to about 3618. So this is your, okay, sorry, wrong pricing, wait up. Let's use your Fibonacci to help you understand how to trade insanely good companies. So given that there was, of course, a strong, take note that Zoom has been rallying prior to the earnings call, but the earnings was great. So we continue to see that any drops from about 198 to 182 will be bought. In fact, some people will even consider buying at 208 for an extension move all the way to about 258. So is there upside if you're gonna buy tonight on the earnings front? From a risk reward perspective, you still got about 23% reward, and you can still consider tranching buying here at about 182 given that earnings report. So I would say that the reward is still there for those who continue to have Zoom. We've been actually advocating buying Zoom here at about 80 to 88. And so we added again at 140. The earnings report will tell you that it's good, so continuously gonna go higher. Have we seen great companies go 1618 extension move? Yes. It was a Zoom video that did that. Shopify did a 1618 move. How do we know this? Because this is your previous V-shape high. Okay, so after your V-shape recovery, in fact, Shopify even went as high as 834. So I would say that in terms of the realm of SaaS companies, software as a service, Shopify is more expensive than Zoom Video, and so there will still be remaining buyers who which will bid up Zoom. Now let's talk about the other earnings front, BZUN. Of course, BZUN is cheap given their earnings potential and the fact that they are a COVID pandemic beneficiary. As you could see, BZUN had a really roller coaster time. $5 to 65, dropped to about 28, rose to 56. Here we have a good risk reward. We're seeing that the recovery could go as high as 55. We've got a resistance we've got resistances at 36, 44, 55. From a risk reward perspective, your risk is just here at about 29. So if you're buying at 32, not bad. This is a buy on earnings breakout. Even at that gap up, you could continue buying tonight. That is still a substantial buy. So yes, BZUN is a buy. Zoom continues to be a buy. Work, which is Slack, which is also remote work beneficiary, will report this Thursday. We might see it go all-time highs owing to the fact that it could be surprise revenue growth again. Of course, this is already trading at about anywhere from 20 to 40 times, depending on how much their revenues would be. If it's gonna go to the upside, just like Zoom, 37 can go 40, 43 to 47, even go as high as, if it's gonna go all the way, it's gonna go as high as 56. Now, the risk reward will still continue to be bullish side. So those who like Slack should continue buying. Those who have it should continue holding. You wait for the earnings because so far this is a COVID-proof play. We said that the gun stocks were rising. The gun stocks are not something that I am aware of, to be fair. I didn't study any of these. But so we're seeing so you could see that since the protest, from 60 it went to 72. I will just wait for Sturm Ruger to be about 65, given the demand. I would try to enter if I really like the gun stock play. But that is not something that I think is a very, very... it's not something, it's not my cup of tea. The gun stocks is Sturm. So I think this is the ticker, SWBI. Smith & Wesson Brands is new. Gun stock, 11 to about 16, 50% up. I guess any drops would be considered a buy, but again, I am not familiar with gun stocks. This is something that you just might want to be aware of. So it's just an awareness on my part. RGR, SWBI, VSTO. Okay. So these are your gun names. So they were rising ever since the violence happened in USA. Okay, another topic that we discussed. Okay, so I've covered Zoom. I've covered, which charts did I not cover? Okay, so yes, I said Spotify is something that I prefer. So yes, Spotify continues to have a lot of buy signals, and we believe that it can still go all the way to new highs, breaking that 195 and going as much as 240. So I hope you like today's chart attack. Take a look and study all of them. And we'll cover some of your questions in the next few days. If that's all, see you again. Bye-bye.